What if the greatest financial force in the world isn't a government, a bank, or even a corporation? What if behind every recession, boom, bailout, and crisis, there exists a quiet coalition, ever officially named, never officially recognized, that profits, grows, okay, and tightens its influence every time a nation falls deeper into debt? And what if every modern country, regardless of political system or economic ideology, is tangled in the same invisible web? We pulling back the curtain on the hidden debt syndicate, controlling global prosperity and ruin a system built over centuries, engineered in shadows, perfected in plain sight, a system designed not to fail, but to ensure you do. Stay until the end, because once you see how this syndicate operates, you won't be able to unsee it. The system nobody questions. We live in a world where financial dependence is normal. Governments borrow, corporations borrow, citizens borrow. Debt is everywhere, yet nobody seems to ask the most important question. If every country is in debt, who's the creditor? The official narratives are foggy. It's bond markets, international lenders, private institutions, public debts owed to ourselves. These answers sound correct, yet none of them explain how debt keeps rising faster than the world's ability to repay it. Nor do they explain why governments who control taxes, armies, and entire economies remain obedient to forces they never publicly acknowledge. But the clues exist. Quiet policy shifts in the 1600s. Major financial turning point in 1913, global re-engineering after 1944. And a series of accidental crises that never seem accidental at all. To understand the debt syndicate, we must begin where all modern financial power began, with the invention of money that didn't exist, until someone wrote it down. The birth of debt as power, the first major shift. 17th century Europe and the 1600s, nations constantly fought expensive wars. Kings needed money desperately, but taxing citizens to pay for conflicts was slow and dangerous. So governments needed a new model, a faster one, a more powerful one. Enter the early private lenders, wealthy families, and merchant bankers who discovered something revolutionary. If they could lend money that didn't physically exist yet, backed only by promises of repayment, they could finance wars, control kings, and collect interest for decades. This was the birth of state-backed détente arrangement that quietly shifted power away from governments and toward private capital. A new class emerged, the debt financiers, not rulers, not generals, but lenders who became indispensable to nations. And with every war, every crisis, every reconstruction, they gained more leverage. But this was only level one. The real transformation came centuries later. When debt became the engine of the world, the second major turning point, 1913, most people know 1913 as the year the United States created the Federal Reserve. But the true story is more complex. This was the moment when private finance became public policy, national currency became tied to credit creation, and economic growth became dependent on one thing: debt expansion. For the first time, money supply wasn't based on gold, silver, or physical wealth. It was based on loans. Think about that. Money was created when someone borrowed. Money disappeared when someone repaid. This upside-down system ensured there was always more debt than money to repay it, an elegant trap. But the debt syndicate didn't fully emerge until the world's biggest economies unified under one structure. That happened in 1944, the Bretton Woods blueprint, after World War II. World leaders gathered in a quiet hotel in New Hampshire and made decisions that shaped the next century. The US dollar became the world reserve currency. The IMF and World Bank were created. Global finance became standardized under American influence. Nations became dependent on the same debt-driven architecture. This was the moment debt became a global operating system. And operating systems always have administrators. From this point forward, countries couldn't opt out. Currencies were tied together. Crises in one nation spread like a virus. And debt became the solution to every problem. Debt created a perfect loop. But the debt syndicate wasn't after control of nations. They were after something far bigger: control of the cycles themselves. When the system outgrew reality in 1971, the day money lost its anchor in August of 1971, something happened that economists still call temporary. It wasn't temporary. The US abandoned the gold standard. With it, the last physical limit on debt vanished. From that moment, Money became unlimited, credit became infinite, and debt became the foundation of the global economy. This was the moment the debt syndicate reached its final form. Because when money has no anchor, debt can expand forever, interest becomes eternal. And governments can never pay off what they owe, they can only roll it forward, paying interest indefinitely to whoever holds the paper. And who holds the paper? Central banks, megabanks, global institutions, private funds, interlinked capital groups that operate above national borders, not as conspirators in a room, but as interdependent nodes in a system designed to keep growing. A system that doesn't need plotting. A system that simply rewards those who maintain it. But by the 1980s, something new emerged. The first signs of global debt addiction. Every solution creates a new crisis, the era of engineered dependence since the 1980s. Every crisis, every single one has been met with the same solution: more debt. 1987 crash, 1997 Asian crisis, 2000. .com collapse, 2008 global meltdown, 2020 pandemic shock, 2023. Silent banking failures and the rolling inflation crisis up to today, each one followed the same pattern. System breaks. Governments panic, central banks intervene, debt levels surge, markets recover, inequality widens, debt grows faster than the economy. This is not a flaw. This is the business model. Because every bailout is a transfer from public responsibility to private balance sheets, and every crisis expands the influence of the debt syndicate. More lending, more interest, more dependence, more control. But the real fallout is deeper. Debt is no longer a tool, it's infrastructure. Nations need debt to function, corporations need debt to grow, consumers need debt to survive. Without expanding debt, the system collapses. But expanding debt eventually collapses the system. That's the paradox that keeps the syndicate in power, the attempts that never work. Over the last century, governments have tried to fix the debt spiral, raising interest rates, lowering interest rates, printing money, restricting money, austerity, stimulus, privatization, nationalization, currency pegs, currency float, gold expansion, gold abandonment. None of it works, because these aren't solutions. They're bandages on a system designed to deepen debt. The real problem isn't policy. The real problem is the architecture. The global economy runs on debt expansion, perpetual interest payments, credit-based currency, asset inflation, and dependency loops. And every attempted fix leads to the same result: more debt issued by the same groups, using the same mechanisms, with the same long-term consequences. Almost as if the system is running exactly as intended. The data that exposes the pattern now, let's bring this into the present. Global debt today, $315 trillion, more than 3x global GDP. Government debt, record-breaking. Corporate debt, record-breaking. Household debt, record-breaking. Every year, debt grows faster than the world's income. This is not sustainable. And yet, the system expands. Shocking patterns. 75% of all new global money is created as debt. The largest 15 financial institutions control over half of global credit, 60% of world. Countries are at high risk of debt distress. 40% of U.S. corporate earnings go to interest payments. Student debt, medical debt, mortgage debt, all hit all-time highs. Nations borrow to pay interest on old borrowing. The world is not in debt. The world is structured by debt. The beneficiaries aren't mysterious. They're the central banking networks, global bond markets, private institutional lenders, sovereign wealth funds, capital consortiums. Interlinked, interdependent, not controlling governments directly, but controlling the environment governments operate within. The hidden debt syndicate isn't a group of people. It's a global architecture with no off switch. How the syndicate maintains power? Here's the pattern. Debt expands, interest accumulates, crises appear, bailouts happen. Public debt rises, private creditors, profit system resets. Repeat, every step strengthens the syndicate, because interest is guaranteed. Assets transfer upwards, governments lose leverage, banks gain leverage, citizens carry the burden. Prosperity rises just enough to keep the system going. Ruin appears just often enough to justify expanding it. This is not a conspiracy. This is a machine built over centuries, standardized over decades, and unquestioned to this day. 3 takeaways. Takeaway 1. Debt is the operating system of modern civilization. Governments, corporations, and citizens all depend on expanding credit. Without it, the system collapses. With it, the system becomes increasingly fragile. Takeaway 2. The debt syndicate is structural, not personal. It's not a shadowy room of villains. It's a global network of institutions whose incentives align around perpetual indebtedness. Takeaway 3. Crises are not malfunctions, they're fuel. Recession, an emergency, expands the power, profit, and reach of the syndicate. We are living in the most leveraged moment in human history. A single shock, economic, political, or technological, could trigger a chain reaction the world is not prepared for. But understanding the system is the first step in defending yourself from it. If you want more deep dives into hidden financial structures, global debt mechanics, and the forces shaping the world economy, subscribe, share this video, and help expose the architecture running behind the global story we're all living in. The more people understand the system, the less power that system has. Stay curious, stay informed, and I'll see you in the next one.